So let me just quickly get on to a short presentation which I have, more to give you an insight what's in store for India, especially from an exports perspective. So if you could just give me a minute, I'll share my screen. So quite clearly, India is on its way on a new wave of growth, and which is going to be led by the export opportunities, what our sense is. And we would like to take you through a few data points, and the data is coming more from a point of view to get a better understanding as to why we believe that this is a big theme. So when we talk about India, and we talk about Indian economy doing very well, we are amongst the fastest growing economies in the world. But for us to sustain this, there are a few lessons which we can learn from many of the other countries which have demonstrated a very sharp growth at different points in time. So there are some examples here. So if you were to look at countries like Japan, Thailand, Vietnam, China, United Kingdom, so on and so forth. And there are two colored bars which are put up here. The important part is forget about the numbers. What is important that every time the maroon bar is growing, the gray bar is a necessary part of that growth, which is either more than the red bar or somewhere close to the red bar. The reason I'm putting this forward is that if we believe that India has to grow over the next few years sustainably, yes, India's consumer is very good. India sells a lot many more things to the Indians, but I think we need to sell a lot many more things to the outside world than what we are doing today. And that is what is going to be the plan even for the existing administration. And we believe that when that happens, the red line for us will also start growing fairly rapidly, which is what we all would like. Because at the end of the day, if the GDP grows, the economy is doing well, all citizens of this country get wealthier by virtue of having more jobs, at the same time participating in the equity markets, which can give them a better result because earnings of the companies would be better. I'll take you to another slide. The next one is a bit of a busy slide. So pardon me for the amount of data put in. Forget about what the data is. I think the most important part is to see the right-hand side where we have put the last few calendar years, such as 2023, 2013, 2003. So basically, it's a 10-year block. And what is expected for India in terms of our ranking in GDP by 2029. So we surely were not among the top 10 countries just about 20 years back, where we were the 12th largest economy in the world. We today are the 5th largest economy in the world. But apart from India, there are many countries which also moved up the ladder during this time, or there were countries, for example, China was the 6th largest in 2023. Today is the second largest economy in the world. So in 20 years, it moved from 6th to the second largest. We moved from the 12th to the 5th position. So when we are looking at our current position and try and see if we were to achieve what is likely to happen in 2029, where India is believed to be the third largest economy, there are few things which will need to be going right for us. And one of the things which we need to go right is how big is export going to be as part of our contribution? Because whichever country we've seen growing up in the ranking has had a very large contribution of their economy coming from exports. So numbers really don't matter. It is what is driving various countries in terms of its growth. Export is one very large piece, and it's the very reason for it is that when we are talking about export, we are not just selling goods to our own country members, we are also trying and selling to the world population. And that enhances the earnings of companies which are doing so, and also countries which are able to do so at a mass scale. We all know United States has been the largest economy for the longest period of time. We all believe that it is one of the largest importers of goods and services. But to the reality is that they also have exports as a very large part of their GDP, almost 3 trillion of their GDP, which is as big as India's overall GDP. Almost 3 trillion of their GDP is exports. And that's the amount of money which they kind of send out by selling softwares to us, selling some hardwares to us, defense, so on and so forth. And India is also aspiring to do so. People give example of China. Surely that's been one very classic case. But there are many countries like even Germany, for that matter, or uh, Israel in a very small size, but surely has a very large export in its kitty. So what's the plan for India? And this is something which, again, I would like to say you can ignore the absolute numbers here because these numbers can kind of confuse us. What is important to look at is India is expected to grow 2 times from now to 2030, which means that our economy will be 2 times the size. So what we did as a growth pretty much from 1947 to 2023, we are going to achieve the same size in the next 6 years, 7 years time. So that clearly is a big delta shift. And within that, the contribution, if you were to look at export, will be a very large part of it. Today, export accounts for about 20% of our GDP, and it is likely to become close to 30% of our GDP. So when our GDP is X, today 0.2 of that X is coming from export. In 6 years' time, this 0.2 is going to be 0.3. So it's going to be a very large part. So yes, our economy is growing, but exports will grow at a much faster pace. And that is where the opportunity lies, because if you grow faster than where the economy is growing, money can be made more on that side of the business. I'll very briefly touch upon this slide. It's not important again from a number perspective, but the direction of these numbers, which is important. So when we talk about exports, generally people think that we are very good at IT, we are very good at pharma, and that's all what we can export. Let me clarify, and I'm going to take you through many, many opportunities which are there in India. But today in IT, yes, we know that we are very good, and hence we have a very large share of the world trade. So when I say world trade, is that if there is 100 rupees done as a trade across all countries put together, we are almost 4.5 rupees of that 100 rupee trade happening anywhere in the world, which means that we are a very large player as far as services is concerned. And we were just about 2 rupees of that 100 rupees not too long ago, just about 16, 17 years back. So we have almost doubled our contribution to the world in services in the last 15, 17 years. The other big area, and I think something which doesn't come very naturally to us when we say exports, is that even for goods, so I'm not talking about any services now. We are talking about merchandise, which means selling of products. That too was less than 1 rupee of the 100 rupees traded in goods in the world is now almost 2 rupees of the 100 rupees traded in the world. So we have kind of doubled or more than doubled our contribution to the world exports which are there. And just to put it in context, the world export is a multiplier of India's GDP. So if I was to take a number right now, just to explain, India's GDP is about 3.5 trillion US dollars. somewhere there, the world services export alone is 2 times the size of India's GDP. So when you are a 4% market share of 2 times of India's GDP, you can imagine what the size is. And when you talk about merchandise export, it is 10 times or almost 8 times of India's GDP is the total, the global merchandise trade, which means all the goods sold in the world across nations and not in their own country. So when China sells to America or America sells to Israel, Israel sells to India, India sells to Bangladesh, that whole trade, when we look at it, is almost 8 times of what India's GDP is. And in that, we already have a 2% market share and our market share is increasing there. So the size and our own presence is kind of building. So it's a great combination where market is increasing and our market share is increasing. So I spoke about the long-term part, but let us just look at the right-hand side here, where what we have done post-COVID. And the reason we are trying to highlight post-COVID is that it has been the most difficult time, both personally for us and for the world, because half the world was shut for a very long period of time. At the same time, there was a lot of logistics issue where people could not move around from one place to the other. And despite that, during that time, India's export growth, both in goods and in services, grew faster than our GDP, right? So what are the big areas if I have to talk about what is driving our export? So I said, when we talk about export, typically what comes to our mind is pharma, what comes to our mind is IT. I think there are few very hot sectors, and this is not an analysis done by us. It is done by a consulting company called Bain Analysis. They have done this data and we have just put it and projected here. When we look at certain areas where, whether it's the government focus, where our competitive advantage lies, these are the areas which are likely to grow very fast over the next 5 to 7 years' time, where we are going to grow almost 2.5 times from where we are from the global export perspective. So chemicals, pharmaceutical, industrial machinery, electronics, electrical goods, automotives, and automotives will include many parts, which is not just automobile itself, not just four-wheelers or two-wheelers. It could be its auto ancillaries and its entire value chain, textiles and apparels. And you can look at the size. The numbers which are put up are in USD billion dollars as an opportunity for Indian companies. And why we believe that we have this big benefit, and I'll take just about a couple of minutes on this because this is, I think, the crux of the whole success story for us. We believe that starting with the left bottom part, which is government policies, reforms, and incentives, is at least very much aligned to focus sending Indian goods and services outside. And that focus is something which, once government realizes, they are not just thinking of depending only on India's consumers, but also the world consumers to benefit India growth story. So the government policies are in 3, 4 forms, and you would have heard it in different ways. One, what they call it as PLIs, which is performance linked incentives, which are given to certain sectors, where if they are able to deliver a particular level of production, there are certain SOPs given. The other incentive was given a few years back to corporate India in general, that we brought down our corporate tax rate to only 25% and MAT even lower, which helped us to be competitive in the world. Because if we are amongst the highest taxed countries, then we cannot be competing with the world. Now, with the new tax rate, we are fairly well balanced. The other part, which is on the top right side, which is geopolitics and supply chain diversification, I think is also a very important part, which is playing off and will play out over the next 3, 5 years at least, where India is, I think, fairly positioned, where we can talk across various countries, in some cases, even opposing countries who are partners with us. At the same time, the world is now thinking of diversifying its supply chain across multiple countries rather than sticking only to one or two. So when that split happens, so especially over the last pre-COVID, if you were to look at 10, 15 years, the dependence on China was significantly high from supplying all kind of goods to the world. Today, I think people are also looking at alternatives to China, as people call it as China plus one. India can get a share of that. And why we believe we can get share is the other two key points. One, I think we have leadership in labor in both in terms of quality and cost. And both are important. It's not just what we are doing is cheap job which somebody else could have done it more expensively in the other country. I think we do more than that. We just don't do what can be called as body shopping. We today can have the skills, or we today have the skills of creating products which can compete with global products, not just because we are making it cheap, but we are making it the right quality and is affordable as compared to some of the others which supply that. So we have that leadership position. And the other part, which is the evolution from being just a cost arbitrager, which is what I was saying, that we were just doing body shopping. We today have been able to put ourselves on the world map by demonstrating our quality of products. This has been demonstrated in many areas, not just in IT. Today, if I was to talk about areas like auto ancillary as well, we have many companies which are competing with global players and winning contracts in construction, in telecom products, so on and so forth. So there are many sectors where we are doing exceptionally well. So where does the opportunity lie? And I'll just take this product in specific to give you an example, that today India's GDP contribution from exports comes at 20% of our revenue is coming from exports. So if you look at how do we capitalize on it as investors, if we were to look at all companies where their revenues, which are more than 20% coming from exports, which means that they are earning in dollars, we have almost 310 such companies already across large, mid, and small cap size companies, which have more than 20% of its income coming from exports. Now, typically what happens is people talk about exports and they think it's very few sectors. Sorry for me to skip so many slides in between, but I just wanted to highlight this. Then when we talk about 310 odd companies today, and we have taken a cutoff of market cap. Okay, so as an investor, retail investor, you can go and invest even in a 100 crore market cap company, but as a mutual fund, we would rather stick to having companies which have got at least a basic threshold. And we've taken a 2000 crore plus market cap company. And so if the company is more than 2000 crore market cap company and have more than 20% of its revenue coming from outside, there are 310 companies and they are across all these sectors. So whether you talk about IT, software and services, surely everybody knows about that. Pharma and biotechnology, people know about that as well. Probably textiles as well. But the fact of the matter is that we are one of the largest petroleum product exporters. We have a very strong export line for chemicals, metals, auto ancillary, agri-foods. So there is a host of areas. And within this, obviously, there are multiple sub-slices within it. So when we talk about, say, auto and auto component, there could be companies which are talking about forging. In some cases, it could be tires. In some cases, it could be chip manufacturers. So it could be many things. They are not just one simple large slice which is there. So when we see 310 companies across all these sectors, We believe that these are the better companies as compared to the others, keeping in mind that they've already qualified to compete with the world. See, when you talk about an Indian company selling to Indians, and if there is no competition from outside, whether we like it or not, we have to buy that product. But when you are going out in the world and selling it to any country, there are at least 20 other countries which are competing with you for the same product, not just from a price perspective, but also from a quality perspective. And these companies, if they have got already established chains, which are going to give them access to building this 20% of their sales to much higher level, surely are good companies. So these are basically companies which could fall under manufacturing. These could be companies falling under IT, pharmaceutical, and so on and so forth. And they have, or in some cases, even defense actually, where we are exporting defense. And since I talked about defense, let me just take this one example of defense that just about 6 years, 7 years back, India's total export was less than $0.2 billion, which is $200 million is what we were exporting. As of financial year 24, that has already grown 12 times. And over the course of next 6 years' time, it is likely to grow even 4 more times. So this kind of a company which is focusing on global export can become a very large part for our success story. Another example, if I was to talk about, is an area like this, which is a company which is getting into a new business called semiconductors. Today, India is wanting to compete in the global conductors business. This is just an example of a stock. We've just hidden the name of the stock, keeping in mind we can't talk about stocks. But you look at the left-hand side bottom. Once the company starts establishing itself as a contributor to the world economy, their earnings growth is not just in a linear fashion, but it's a J curve. So many areas like renewables, semiconductors, auto ancillary, defense, all these, India is becoming a very large player. We are not large as compared to some of the countries in one or two specific areas, but when we look at as a world contributor to the total exports happening in the world, we are now becoming a far more formidable player. Another example, and this is from an IT field, where if you were to look at earlier, as I said, IT, we were pretty much a body shopping company. This is an auto research and development uh, provider. So it's basically here, if you were to look at the revenue growth because of the opportunity in the world market, and this might not have a very large opportunity in India, but the world market has a huge opportunity, helps these companies to grow at a much more rapid pace. So these are some of the areas which we think are likely to build up and make a very strong case for an Indian investor to look at companies in a filter where it is going to dominate from a world market perspective. 2, 3 areas which will not form part of this strategy. One of the areas would be banks and financials, because they do not have any revenue coming in from exporting, because banks and financial services, so including a mutual fund, will service the Indian customer and provide services to India. There is no export coming in there. Say a real estate player is typically having its own business locally, or a gas supply company which will supply gas to the local team. But apart from that, you will have multiple sectors as put up here, which can form part of this team. And we are very confident that if you were to look at India's growth becoming 2 times the size of our GDP in the next 6, 7 years, export will be and need to be a very large part of this whole journey. And if you want to participate and benefit out of it, obviously, these are some of the areas which we should look at. So with that, I would open the floor for questions. I'll stop sharing my screen so it's easier for you to look and discuss.